So everyone is just going into these non-state income tax states. And so I think it's just people have been, it's like as COVID was a catalyst for change, COVID was also a catalyst for investing, and people wanted to invest in the Southeast and Southwest, which means there's more demand. The supply has not changed. If anything, it's remained constant because COVID stopped development.
Right.
There's been some releases, but with more demand, prices have gone up. Even in Knoxville, we've seen a $20 million asset bought in 2020 now trade for $31 million.
Your network is your net worth. Come listen to some of the most successful people I know share invaluable knowledge, stories, and advice in real estate, business, and beyond. This is Weiss Advice. Whether you want to take your business or personal life to the next level, look no further. Welcome back to another wonderful episode of Weiss Advice. I'm your host, Yona Weiss, and with me today, we got a great, amazing, incredible, wonderful, friendly guest, Mike Taravella. What's going on, Mikey?
Yona, I'm just trying to take over the world with you one step at a time, and super happy to be on here. And just ready to talk real estate, friendship, whatever you want.
Let's do it. This is awesome. Yeah, I'm excited to talk with you. We had a great time on your podcast recently, which is the Wheelbarrow Profit. Is that what it is? Or it's like a side podcast?
So I think of it as like a YouTube channel. I don't even know sometimes because it changes, but like Wheelbarrow Profits, Jake and Gino, or I think it's Jake and Gino is the main attraction, and then there's subsequent like throughout the week.
So we were on like a sideshow kind of thing.
Hey, you bring it, Jake and Gino bring them in, welcome you to the family, and me and Yona will greet you on the inside.
All right. I didn't mean like sideshow, like freak show type sideshow, but like, a different show. Anyways, go check that out. It's an awesome podcast. Obviously, Mike, you're with Rand Partners, which, as you mentioned, alluded to a second ago, Jake and Gino kind of kingdom, whatever you want to call it, that they created this ecosystem many years ago and have an incredible mentoring program, have a great acquisitions group, which you have come on as recently, a couple of years ago, as acquisitions, right? Manager, I guess. You're dealing with taking over, like you said, taking over the world, looking at buying deals. So tell us a little bit how you got started with that. I mean, you have a background as a CPA, right? So you went, and I actually remember the story you told on a podcast about how you first realized you wanted to be more an entrepreneur and go into real estate. But tell us, maybe just the long and short.
Yeah. So, I mean, I grew up I was really good at math, did account, and I wanted to do business. So I didn't want to be an educator because my mom did that and my grandma did that. And I was like, they don't get paid enough. They work too hard. Yeah, they get summers off, which I know my mom would beat me up if she heard me say that. So, or that my family worked for Chrysler. So I didn't want to do that either. So I went to business school because formal education was a big family paradigm. You went to college. Like I got a master's degree and I'm still not the most educated person in my family. I think my mom has two. So I started a screen printing business in college, which was like my light bulb clicking if I wanted to run a business or start and be entrepreneurial. Which is not very accountant-like. And I'll never forget, like the last week before graduating and starting the real world, my professor said, "Hey, am I gonna like public accounting?" And she laughed and said, "Absolutely not. You have a risk tolerance unlike any other accountants in your field, and you will struggle." And I laughed. I was like, she was probably just saying it, but I love her to death. She was right. I did 2 years in public accounting for Ernst & Young. Amazing experience, seeing all the financial aspects. Which then led me to the opportunity to work for Dan Gilbert, who owns Quicken Loans and the Cleveland Cavaliers. I worked for probably 17 startups. The two my most favorite were 100 Thieves, which is an esports org, and the Woodward Original, which is a media production. So just taking nothing and building that up and helping businesses scale is like my one cut above the rest that I like doing. And so I realized that I was like doing some single family because of bigger pockets. But I was like, I have to wait a year of salary to then invest with a partner. And then if anything happens, then I have to swing a hammer, which if anyone sees me with a tool belt or tools, watch out. It's not good. It was a bad day. And so I was like, there's got to be a more efficient way to doing this. And so I found multifamily through Bigger Pockets, met John Kasman. I literally went to his first ever event, as you do with anyone on the internet you meet. He says, "Hey, come visit." We went, changed my whole paradigm. Everyone in the room was doing smaller multifamily, bigger multifamily. And I was like, oh, this isn't just for the rich and famous and just like,
Right.
this is for real people. So spend a year helping him work. I moved to Chicago, worked with him, helped him, promoted his meetup, volunteered for underwriting for different groups. And then I got my mentor called me and goes, would you move to Knoxville to do multifamily? I'm like, well, to be honest, I'm working 10 p.m. to 2 a.m. trying to do this anyways. So if I can work during the day and not have to do it so late every day, sure.
Yeah.
And I had an interview the next day with Jake Gino and the team. And then 3 weeks later moved to Knoxville, and that was July of 2019. And it's been over 2 years and been a part of 31 million in transactions and working with our asset management and just building those systems and trying to take over the Southeast. That's
awesome. Yeah. I mean, it's an incredible experience when you're working with other investors, other like-minded people who are, for all intents and purposes, kind of just a couple steps ahead of you, right? These aren't people that came from, a real estate investing career that, maybe like a private equity firm or something like that. This really, the syndication business is a great business because it brings entrepreneurs who are really, we're successful in business, or we're successful in helping, like you mentioned, in your accounting side of things, helping startups, but at the same time, kind of like learning the ropes and doing that through teaching as Jake and Gino do and stuff like that. So it's a lot of fun because it's kind of like learning new things all the time and applying them and networking with incredible people and partnering on deals with awesome people. So it's just kind of like it's an ecosystem that the multifamily kind of investing space that you talk about, especially when we go to like the conferences. You mentioned the John Casmans, the Chicago, what was it called? The Midwest
Real Estate Summit.
Yeah. Midwest Multifamily Real Estate. I don't know if it's multifamily, it's probably not. But Real Estate Summit, yeah, that one, I think we met there also. I don't know if we met there, but we met in many conferences as well. People don't know this.
I've been a part-time Yona Weiss security guard.
Yeah, people don't know that. But yeah, that's your side job, which maybe one day we'll go a little more full-time when we're at conferences together, right? You protect me from all the LinkedIn fans from attacking me. In all these conferences. No, it's always fun to meet and see people who, like you said, you meet online, you're in this multifamily real estate investing space, and you get to collaborate, you get to meet in person, you get to create new opportunities. And like you did, you were able to find a new job, a new career, which is in something that you wanted to do anyways. And now you're enjoying it. And who knows where the next year or 2, 5 are going to lead you.
Yeah, exactly. And it's all from adding value. Like you do it on LinkedIn all the time, connecting people. On my background, I tried to get away with it Excel, but it keeps bringing me back, and just that numbers, aspect that I try to get away from and be someone else. It's like, no, double down, know the systems. I'm really good with systems, building it out, these processes. So don't run away from it. If anything, double down, add value to an existing operation, and you can get there much faster than building it all by yourself, which is impossible.
Right. Absolutely. And I mean, maybe can you touch on a couple of things? Because asset management is a great topic. We've talked about it before in this podcast, but what are a couple of things that you have, kind of learned or picked up or implemented recently in terms of your team and what you guys are doing to make more efficient the asset management? Maybe for the other, people who are listening to this, who are real estate investors themselves or looking into it and maybe could learn a thing or two, have an advice, maybe some Weiss advice, if you will.
I think the biggest thing is looking at asset management. It's accountability. I see on the podcast circuit, it's manage the managers. And my mission is to kibosh that, because it's impossible. I could underwrite the deal wrong 10 different ways, but for me to expect my property manager to execute on an unrealistic business plan is not ideal, not the right answer. So it's keeping everyone accountable. So like the property manager is handling the day-to-day operations, whereas the asset manager looking at the numbers and making sure, are we going in the right direction? Can we pivot? Do we need to downgrade? Do we need to upgrade more? Like, what is the best thing we can do from the property manager and asset manager to get on the same page to get the highest value? And so in return, the investors keep you as the asset manager accountable. So I use the analogy all the time to our property managers. You're like on Shark Tank. You need to know all your numbers. And so just having that frame has been super helpful. And I nerd out by looking at all the data. We have about 1,500 units. So I can spot trends very quickly of, all right, we've been stuck at 90% occupancy at this property, but our marketing's good and our applications are in. What are we doing wrong there? Hey, in this market, our delinquency is a little bit higher. We need to do a little more outreach for rental assistance communities and just making sure we're communicating. So it's making sure, like, if this isn't where it needs to be, then what do we need to do? For us in East Tennessee, or generally if 95% of our occupancy, if it's below 95, we're then checking our marketing. Are we getting enough people inquiring or looking at the property? If so, then we're looking at our applicants, because if we're over promising and under delivering, people aren't going to want to live there.
Right.
So it's a very methodical, like, weekly cadence that Jake and Gino have, but we've kind of added on to it so that we're always looking on our weekly huddles with leadership. We're looking where economic is, seeing who are the laggards, who are moving forward. And because that's where you can see some potential turnover happening is if, hey, we've been at 90%, historically, we're 95 to 98%. What's going on? So I'm presenting financial reviews to our property managers so they know. So internally we can see, because at one point it's a snapshot, but if you keep taking snapshots, you're going to see a painting and seeing what's going on. So we've had properties that were 50% occupied and now they're 98% occupied. We've added 2 units. So it's like you can't just look at one time and say this is good or bad, but it's what does the whole painting look like, making sure we can add value as much as possible. Sure.
So, I think those are some amazing points, right? The accountability aspect of it, of just keeping everyone, like you said, you're being held accountable by your investors, making sure that they're getting the returns that you promised them, or at least projected to them. You're keeping your property managers accountable for making sure they're running the actual deals. You're not on site per se. You're not too far from a lot of your assets, right?
We pop in, but by no means I'm like, hello, residents. It is I.
But yeah, there are so many ways that you can add value, like you said, and by doing that, by just keeping everyone in the same picture, in the same boat, where you're, like you said, you're doing weekly check-ins, where you're looking at things on a regular basis. I think it's really important. Many people might think, oh, that's too much, overbearing, whatever. Maybe just take a little break, or, the property managers are doing a great job. We don't need to check in all the time. No, you can always get better. And I think that's where a lot of people make mistakes, is they kind of are busy chasing new deals and chasing new properties a lot of times, and not necessarily spending enough time to make sure the properties they do own are, running top notch.
Exactly. Yeah. Feedback is a wave. If you keep checking in on it, it won't be like unbearable. But if you wait for a while, it'll come back and be a big one, good or bad. And you have to accept that and be accountable to it.
Yeah. 100%. 100%. So you guys are looking new deals all the time, right? You deal with a lot of acquisitions as well, not just asset management, right? So you're looking at underwriting deals. Your expertise is, like you said, in Excel and doing running numbers and stuff like that. Are there any trends that you're seeing right now? I know there was a lot of talk over the past year and a half with COVID, and who knows what was going to happen. There's going to be a crash. There was going to be this, and it didn't. Or anything new that you're kind of seeing as you're looking at deals all the time and putting in offers, et cetera?
Yeah. So I think overall, us being in Tennessee, and the markets have gone insanely hot, in the sense the new Northeast and the Midwest are funneling down to Tennessee and Florida and the Carolinas. So they're getting much hotter, having students all over the country. Northern California is going to the Nevadas, Southern California is going to Texas and Oklahoma. So everyone is just going into these non-state income tax states. And so I think it's just it's like, as COVID was a catalyst for change, COVID was also a catalyst for investing, and people wanted to invest in the Southeast and Southwest, which means there's more demand. The supply has not changed. If anything, it's remained constant because COVID stopped development.
Right.
There's been some releases, but with more demand, prices have gone up. Even in Knoxville, we've seen a $20 million asset bought in 2020 now trade for $31 million.
Wow. That's a huge increase.
And literally a calendar year. So it's just really important that you have, as an investor, your metrics, because when people say it's overpriced, it's arbitrary. Because if you have a private equity firm or Blackstone or a family office and their goal is to beat 3%, get the tax write-offs and go, they don't care that it doesn't cash flow 5, 8, 10%.
Right.
Us, we need to have higher return thresholds than that. So it's making sure you stick to your numbers and just underwrite more. Everyone I've talked to in the industry is like, we've been offering underwriting more than ever, because our mentor Bill Ham said race to 80. I've talked to other groups, it's now 120. We've submitted over 30 offers this quarter of 214 properties across the Southeast. I think on a weekly basis, I'm going to Nashville. So you have to be aggressively patient.
Right.
It's the best way to do it is just don't pencil whip a deal. Don't, have a cap rate go the other way, but just keep hitting your numbers and underwriting and reward the good behavior for underwriting, not getting deals. Because if you have that metric, then you're going to buy a bad deal, then you're going to lose sleep. And then it's just a dynamo of just not good things. So just reward the good behavior of underwriting and calling brokers versus getting a deal, because eventually if you do enough of those things, you'll win.
That's a good perspective, right? It's obviously you have to do what you can do. And I think I totally agree with that. Like spending the time networking, spending the time calling brokers, looking at deals wherever you can, something is going to hit, right? I've seen so many people like just focused on, we got to buy, and, missing some metrics. And I kind of been surprised to see people in the past year, so many acquisitions happening that, to be honest, I'm not sure how many people are making that much money, but you never know. I mean, there are so many different plays that people are doing right now, not necessarily the value add play that has been so popular the past several years. People are doing other types of deals where maybe the structure is a little bit different and just expecting, maybe more appreciation. Maybe they just need the tax benefits or whatever. And so it's worthwhile to buy a deal for that.
Yeah, I bought a 36 unit just south of Nashville, and literally I couldn't, like, going in, I've never heard of this city. It's 45 minutes south of Nashville. And I was like, okay, I'm going to, as part of my quarterly goals is to go on 9 property tours. Mm-hmm. I went on one. I go, wow, there's so much development going here. And you don't know sitting behind a desk, because you really it's just, they're saying it's Nashville, but you see all the development and
Google Maps doesn't tell you too much, right?
No apartments. And you're like, oh, well, this is a 1970s product. This'll rent out all day. So it's like, if you get stuck kind of in your Google Map mode, yeah, you can do a lot of work, but brokers will take you more seriously going out there. You might not. And then even if you're out there, they're like, hey, while you're out here, go check this out. And then you saw 2 properties and you're only expecting 1. And it's just, you never know what happens, right? Every time you think the world is going to end, a deal comes up and you're like, man, real estate's so easy. It's like golf, right? Hit it like crap every time, but then you get a hole in one. You're like, man, this game's super fun. And it's just, you got to reward yourself when you're doing the revenue generating activities, whether it's talking to investors, brokers, underwriting, whatever your activity is that you're one cut of, do that and do it really well.
That's awesome advice. Awesome. That we, that's going to be our wise advice for the day. I think that's awesome. Just reward yourself for those, value added, income what was the word you income generating, revenue generating activities. There you go. Okay. Love that. Any new kind of things going on with RAND Partners? I mean, I know Jake and Gino got the whole educational platform, which it seems like they've transitioned a lot more out of the actual day-to-day real estate over the past. Is that just my impression, or am I? I
think it's it's hard, right? Because Jake's the head of the property management company, which definitely does not get the praise as on the podcast circuit. Like, the whole property management team makes me look really, really good, and the team look really, really good because we're finding deals.
Right.
But Jake and the team have been tremendous. Yeah, Jake's in it every day. Our regional's out on maternity leave, so Jake is picking it up. But yeah, it's kind of like the 3-headed monster of Jake is heading the property management company, which hiring has been difficult, and managing COVID on top of everything. We have a lot of A players there that have been doing phenomenal jobs and been super helpful. So shout out to RAM Property Management. Gino has been spearheading MM4, the multifamily Mastery 4 event in the end of October. Mm-hmm. And so and his team has been enrolling people in, and I think we hit $1 billion assets under management with our students alone. So that's been great to see grow, and then just finding deals. If anything, I joke going, I need to find more deals to catch up with the other two pods in the group going with it. So
right. So you're basically slacking. I mean, that's really what it comes down to.
It's been hard. And that's why I tell people, it's like, don't worry about I like thinking in bets, the term is resulting, but like, don't fall in love with the end result, fall in love with the following the pattern, because if you're like playing poker and you play the number correctly, more likely than not, you'll win, but don't, worry about the end result. Because if you buy a deal, you get that act fee, you're like, yeah, I made it. And then all investors are like, why am I not getting paid?
Right. Yeah, for sure. No, you're doing an awesome job. And if you're a broker and you're listening to this, reach out to Mike, send him a deal, send him a bone. You guys are doing awesome stuff. Love to see the growth. And it is incredible that you can have those three branches really kind of going all hand in hand. And, a lot of people.
Plus, we're working on development as well. So
that's
been fun. We've been looking at land and just really scoping out the Knoxville area and just trying to find what makes sense, because with rising obviously labor and everything has been going up, but we feel that we could build cheaper than some of the acquisitions. We're still learning, but we're excited. We got our GC license in house.
Nice.
And we're just excited for the new opportunity, which once we build, we can have our more team members that can do more things and just add so much more value to our already growing portfolio and team.
Absolutely. So it's a much, more long-term kind of build, but the new development, but any great real estate company at any given point, right? They're going to start looking into how you can make more money in other aspects of it. And development is, even though it's a very long-term thing, it's a great way to kind of supercharge that. So that's awesome. And I'm actually hoping to make that conference down in October in Orlando. So we'll put a link to that. I hope actually maybe we can probably push this to get this podcast aired before that time. So anyone listening to that,
I'll see you at NMHC and brush off the security.
There you go.
And get it going.
NMHC. Well, that's already January time, right? We got some time.
Yeah,
until January.
I gotta stretch out for that one. Get ready for it.
It's not working out. Do some more push-ups. Something.
Exactly.
That's a lot of fun. So we'll make sure to put a link there to the Multifamily Mastery Summit. Is that what it's called?
I think so. Yeah,
something
Mastery.
like that.
Yeah.
Whatever event down in
Jake
Orlando.
and Gino MM4. You'll find it.
Awesome. So let's just move right into what we call the final four. This is a transition where we like to ask 4 questions to our guest, Mike. First question for you: what's the worst job that you ever had?
Worst job I ever had was Taco Bell in college. I was at Michigan State, but not like the famous one. There's one on the main, and everyone's like, no one should work there. But I learned how not to run a business because the manager, I'll never forget, they didn't have enough money. And so I was like, oh, do you have another card? And they drove off, and the manager yelled at me for not giving away free food. And there's just a ton of drama, and just, it wasn't for me, but I just realized that this is not how you run a business. And I got to eat some tacos along the way as well. So I would say the Taco Bell, in the sense of just like, this one was just a hot mess. Should have had a TV show, but we survived and advanced.
That's pretty crazy. Well, it probably has something to do with the fact that it was on a college campus, right?
But there were much, it wasn't like kids running it, but it was just like it was like a mix of Maury and not Shark Tank combining into one TV show. And I was just like, what are we going to get into today? And I learned very quickly how not to run a business and how not to manage people.
Right. Well, there you go. That's a very valuable lesson. You got to learn. The right things to do from the right people, and the wrong things, what not to do from those experiences as well. So that's awesome. Second question is going to be, what's a book you've read that's given you a paradigm shift?
I think Ray Dalio Principles has been huge, because everyone teaches you how, there's books like Traction on how to run a business, but even just to think like one of the best investors in the world has just been mind-blowing. Not an easy read. It's a book this thick, but it really helps me understand how one of the greatest minds in my eyes of investing thinks. And it's building the mental maps and going through it and just repeating it over and over and over again. And you tweak as you go, but it's a very simplified form of like business and investing and everything else. So he's been an amazing resource in my life. Awesome.
Yeah, we'll make sure to put that in the show notes. Ray Dalio is definitely an inspirational person in terms of business investing and his mindset that goes along with that. I think anyone who's in the investing world knows who he is and can, attest
if not,
to that.
You're welcome.
Yeah, exactly. Right. There you go. Check that out. If you haven't, we'll add that one to the reading list. Third question, what's going to be a skill or talent that you would like to learn?
So I think this one is two. I would love to learn coding so that I don't have to do Excel as much. So then I just it all intertwines because I know enough Excel to be very quick, but I think the real skill is in coding because then you can tell the computer how to do it.
Right.
And another thing has been stand-up comedy. So I did it once and it went well. I'm not saying I'm going to be on Comedy Central or have my Netflix special come out anytime soon. But having the ability to, I like to think I'm funny, but it's just understanding the art more is one thing that I've been really understanding more and just trying to figure out how to craft it. And so it's just been that expansion piece has been very interesting that I've been working with. So I'm going to actually do more of it, but how? And just figuring out that art.
Good for you. Yeah. Was it the stand-up, was it an open mic type thing or you actually had It
was an open mic and it was 6 minutes. I did 6. They cut you off at 7, but I timed it out at 6. It was really good. My girlfriend helped me. And once I got the mic, I was like, oh man, I felt like a warm calmness and time. And I was walking through it. And I was like, oh, this is just ability to make a lot of friends very quickly and make people laugh. So
that's awesome. That's a great skill to have. What can I put you on the spot and just maybe tell a joke? Something that was part of that routine or something like that?
So every time I tell people that, they go, tell me a joke. And I go, airplane food. What's up with that? But some of the jokes were
what's the deal with airplane food?
But yeah, I think I was just talking a lot of my parallels of living in Chicago and the Red Line and having a couple instances where I'm thankfully alive from it. So
okay. So it was a PG or it was a little
some swearing involved, but it wasn't grotesque like other comedians.
Okay,
I swear sometimes, probably more than I should.
well, I guess we'll keep that off the wise advice. If anyone wants to check it out, they'll Google it. It's probably somewhere on the internet, right? Someone probably
it is, but I hid it for the world, so I text it to select people because the last thing I need is me on the internet swearing and making people. It's safe for comedy, but some people don't like swearing. That's okay.
Yeah, I hear that. Okay. Well, I definitely understand that and appreciate that. So we'll move right into the fourth and final question, which is, what does success mean to you?
I think for me, success is more of an impact. So working with Dan Gilbert, it wasn't just how do I make money, it's how do I change the world. And so for me, it's been how do I think with my generation of investors, I think the biggest thing has been cryptocurrencies, real estate, and there's just a lot of different avenues where I think the worlds can merge together. And so I'm exploring that in ways to how to revolutionize real estate. Mm-hmm. And so my goal in life is to become a billionaire, not for status or ego, more of to make an impact in the financial world. Because I feel like millionaire is the status, billionaire is the impact, and looking at what Bill Gates, Ray Dalio, all these people have done for the world, and even Dan Gilbert, it just took a path and went really super deep, and that allowed them to do other things. And so, on my vision board, it's venture capitalists, developers. So it's just figuring out how to do that. And so I turned 30 the end of November, so we'll figure out how to do it a little bit more, but it's been fun every day, meeting new people, uncovering new possibilities, and just seeing how that future can look like. Right. And it's not easy, but it's just been a project that I've just been trying to navigate a little bit day by day. And it's been fun.
That's exactly how you do it. Just day by day, right? One step at a time. You just, one foot in front of the other, just keep going, have that vision, like you said, and hopefully do good things with whatever wealth you can create, whatever you can do for the world. So appreciate that. Yeah. Where can our listeners find you or reach out to you?
At Value Add Mike on Instagram, Twitter, I think LinkedIn, Mike Taravella. I realized no one can spell my name the first try, so I had to change the handle. Also, you can reach out to me at Mike T at RANDCRE.com. And yeah, happy to connect on LinkedIn, wherever. I'm happy to just help everyone be a little bit, add value to their life as an investor. So just whatever I can do to help, I'm more than happy to do so.
Awesome. Well, you have done so already. through this. So if anyone who listened to the end can attest to that. And I appreciate you taking the time out with us today, Mike. It's great to catch up and look forward to, getting back in the ring, going to these conferences sometime soon.
Exactly. I look forward to it, Yona. Thank you so much for having me on and just doing what you're doing every day, just making the world a better place.
I appreciate that too. And to our listeners, thanks for joining and us in this conversation. And remember, the best advice comes only when you ask. Real quick, I have one question for you. Did you like this episode? If you did, I want to ask you a huge favor. See, the biggest thing that helps this podcast grow and that will spread this message to the whole world is that if you leave a review, a rating, and subscribe to the podcast. What that does is it basically tells the platforms that this podcast is out on is that you like my stuff and I'm doing something right. So take a few seconds out of your day, hit that subscribe button, leave a rating or review. I would be extremely grateful. Also, I want to hear from you guys. So I want to hear some feedback. If you have any questions for future episodes, please find me on LinkedIn, send me a DM, a connection request, Yona Weiss, and I'd love to hear from you.